When you lose your big dog, that's what happens to the market. We'll discuss Nvidia, where it's going from here. Try and figure out where it's going from here. Tough day to report earnings, no matter who you are, retail or tech. 8:35, Jim Tassoni joins us with his outlooks here on the market after the big sell-off. We got some work to do on this Wednesday on pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. The sell-off continues in the S&P 500 index futures. We're down 22 and a quarter handles, hanging out at the 55.20 area. The buck giving a little bit back from that 4-day rally, down 16 cents at 101.60. TLT, well, it's up 24 cents, 97.99. Crude flirting with the $70 level, actually went below 70, but now back above, up 56 cents is 70.90. Gold in the red by 350. Silver going the opposite way, up a couple pennies at 28.37. Bitcoin futures under pressure this morning, down $1,415. Let's bring in Triple D here on this Wednesday. People are anxiously awaiting
Look at these
your
little circles we're in now. They
I know.
changed
I'm trying to.
squares to circles.
I'm trying to figure out how to fix this.
They keep changing everything over here on StreamYard. We're dark, now we're circles.
Yeah.
So weird.
I feel like I don't know, like I feel like I'm on a game show or something.
Yeah,
you know?
We are, Joel. We've been on a game show for 20. I've been on a game show for 22 years. You've been on a game show for 40 years trading these markets. It's all just a game show. What's behind box number 2, or what's in box number 2?
Oh boy, oh boy. Okay,
You get
Dennis.
losses if you're long. Wow. What happened? What'd you do yesterday?
Oh man,
You
I
didn't
don't
buy
know.
enough stock.
I tried to get,
bit.
I tried to say I was nervous last week, and I got ridiculed in the chat for saying it. And now, man, holy macro, we lost our big dog. We lost a big. We have a horrible day in Nvidia, and then boom, then the DOJ thing comes out. Let's bring in AB. AB on the rebound, buddy. How you doing? I feel like I got a sick kid in the family here.
I'm okay. Yeah, I was still dealing with. I think it's just a cold. I don't think it's COVID or anything because I've been coughing, but just my sinuses have been congested.
All the colds are COVID now.
What'd you say?
All the colds are COVID now.
Yeah, I mean, I don't know. I was a little late into the office this morning because I had to take a bunch of NyQuil to even sleep last night.
Stuffy.
Oh man.
But all right, yeah, I mean, yesterday, obviously, Nvidia was the story of the day. I mean, closing down nearly 10% yesterday, 9.5% down, another 1.5% this morning. And then you mentioned the DOJ. So the DOJ subpoenaed Nvidia for potential antitrust violations. So I mean, the stock was already down a lot before then, and then
when they're down.
Yeah, exactly. You know, the DOJ. It's like they don't care. The DOJ doesn't care. The DOJ is not going to look at the stock price and say, "Oh, let's do it on a day where Nvidia is not down already." So let me get the exact time stamp that hit the tape
last night after the bell.
Yeah, I mean,
and there's a rumor, and I even retweeted it. There's a rumor that Pelosi sold all her stock the day before, but everybody's reaching out to me and say that is unverified. There's no truth to that. So the tweet from, and there was multiple people, like it was all over Twitter last night. Anyways, the rumors are apparently false. We have no confirmation that Pelosi sold all of her Nvidia calls the day before. It wouldn't have surprised me though. It wouldn't have surprised me though, so pretty funny. But
it wouldn't surprise
it's funny
you?
how insiders can insider trade, or how politicians can insider trade and not get punished for it. But anyway, the rumors are apparently false.
There was like this whole section of Twitter, those like, and the problem is now, Dennis, they all have the blue checks still that are tweeting it, so it looks real. But there was like
There was so many. It was all over Twitter. I was like, oh, it must be true. It's on Twitter. Isn't Twitter always true?
I know, and I saw that too. And I think what happened was like one of those like accounts like tweeted it as like kind of like a joke, and then it got a lot of traction. And then all of a sudden, like I saw the same exact thing, like 5 other people doing it. So then I went online to try to find like a Reuters or CNBC article about it. Nothing. And I was like, okay, these are all like no actual like Bloomberg reporter or anyone like that was tweeting it. It was all these just kind of like aggregate accounts, but some of them have a lot of followers. Like,
there was a few that had like 150,000 followers. Like there was like, and it was multiple counts, like a lot of counts tweeting that. So yeah, but on further research, it sounds like we don't have any confirmation of this whatsoever. Although it wouldn't have.
I didn't see it on Brazilian Twitter.
They're on Brazilian Twitter? What happens on Brazilian
Twitter?
Lots of they have good meats down there, like good eating down there in Brazil. They probably talk a lot about good steaks and stuff.
Yeah, good steak.
It's the worst digression ever. We have like an epic sell-off here, and we're talking about Brazilian meat.
I know.
Let's go. NVIDIA. We'll move away from the Pelosi conversation. Let's just go. Overnight, obviously, we had the DOJ hit it. Gets hit hard yesterday. You talked about the 117, Joel. Takes that out. It was just straight down from the opening print. DOJ hits it yesterday. Is this the bottom? We come in here. I still own a little piece. I'm saying I'd be a buyer at 91. I'm not sure you're going to get that far down. Joel, tell us where the bottom is.
I need a day or two to evaluate this. I mean, I needed to shake out for a day or two. I would just say pretty important numbers that closed from yesterday, because if you were trying to buy the dip on it, that's where your mark is, and your mark, I believe, comes in at 108. So I'll give you that. If you get a look at 108 today, need a sustained 108 bid. I'm not going to try and pick a bottom in here. It's in no man's land on the downside. So that's it. 108, one number. That's for Nvidia.
And then obviously everything snowballed. Nvidia was the catalyst. So it really opened at the highs and tanked, and then everything else followed. Obviously the Qs, but it wasn't just a tech wreck, folks. A lot of times you see, when the tech's getting hit, they're buying other stuff. The IWM got hit just as hard. It was no mercy there either, straight down. So, you can call it maybe Tom Lee, because he's been bullish, nonstop bullish talk for decades. And then he comes out with the 7 to 10% talk yesterday of a correction of 7 to 10%. And everybody's like, uh-oh, we're losing the biggest bull on Wall Street. And that's not good news. So it probably spooked a few people. And CNBC was nonstop talking about Tom Lee as well, even though he's always just bullish. But, he makes a bearish call. Stocks get hit pretty hard yesterday. And then you got September. We talked about this too. Seasonality. It's historically the weakest month for stocks. So all of this just snowballed into a selling frenzy, profit taking, call it whatever you want. The question is, the show's title is The Aftermath. What do we do now? Asking the chat, asking Joel, asking AB. I'm a long-term investor. Am I buying stocks here? Question.
Well, so I was texting some of my friends yesterday, because one of my friends sent like a screenshot of the heat map, and they were like, "Are we screwed? Are we heading into a recession?" And we were talking about, because one of the tweets said the market over $1 trillion was wiped out of the stock market and market capitalization yesterday. Then you look at it, and like more than 300 billion of that, basically a third, was Nvidia. I was like, honestly, if Nvidia keeps falling, I'm gonna load back up. But everyone always talks about you don't want to catch a falling knife. You don't want to come in and just buy right after the big dip. So I'm gonna wait to see. If Nvidia keeps going down below 100 to say like $90 or $80, then I'm going to reload up. But I'm not going to come in and buy today. But certainly, if Nvidia does keep falling, I will use that as a buying opportunity.
I think you do at a certain point in time, but again, like I was saying yesterday, and people were talking about Nvidia buying the dip in Nvidia yesterday, and I'm going to say the same thing. Just the valuation has really become stretched. A lot of pull forward here. And I think just stocks just don't go straight up. So it's not that easy. So when Nvidia, when we were talking about this at the beginning of the year, January 7th, when I put it in my acronym, and the stock was $47 or something on the post-split basis, or $50. The forward PE was about 27, and the stock was, really just a $1.1 trillion company. It is a lot harder to grow a $3 trillion company than it is a $1 trillion company. It became the most valuable company in the world. We were saying, on the run up, I think it could become the most valuable company in the world. It did for a brief period of time, and I mean very brief. So I think just enough people were chasing. You got to shake all those chasers out. Has Nvidia seen its all-time highs? I don't think so, but I think it's got work to do in here now. I think you got to back in and fill in, shake some people out, get stronger hands, let the valuation come in a little bit because it just got so stretched. I think I'd be a buyer at the 91. I think a nice double bottom on the 91 would be good. I don't know if you're going to get a shot there. It's 15 bucks away, but I think I'd reload a little bit there because the valuation starts to become a bit more attractive. But again, you have to consider the pull forward too. So, I think that call, I actually called Nvidia really well this year because after the 140, remember it was about 135, I said, I wouldn't be surprised if this is the high for the year in Nvidia. Well, that looks kind of safe at this point in time. And obviously, I sold some stock. I sold multiple times. I think we're just at a point where valuations for everything is stretched. So this is just what you call your normal correction. Like people are saying, oh, the economy is going to recession. It's over. The story is over. Commodities are getting hit. Everything's going down. That could be the case, but I think we just due for a cooling period. I mean, stocks don't go straight up forever like Nvidia. Microsoft, again, it's not cheap. This is all just correcting valuation because Microsoft is probably the most expensive it's been since like the tech bubble. Now, during the tech bubble, it was 70 times earnings, which was ridiculous. But, at 35, 38 times earnings, I sold my Microsoft position. Well, that was wrong because it kept going. But I think, you're coming in here and paying 35, 37, 40 times earnings for stocks. Where is the value? The value is not when you're paying 40 times earnings for stocks. So I think we got to let them come in.
I think just pay attention to your monthlies on some of these things. If you're looking to, drill something down and, look at this consolidation period that you had in late 2023 in the bottom right chart. We're looking at 1, 2, 3, 4, 5, 6, 7 months of blah. And then now you look at the monthlies are messy. I mean, 3 lower monthly highs. That's working on a 4th lower monthly high. August, of course, that low was just a flash in the pan low. So if anything, need some long-term consolidation. And I don't know if you're going to get that again. You did have a couple periods in late 22 and then late 23, but a lot of volatility and a lot of people caught though, Dennis. We talk about this when you have these big run ups, the run up to the old time high, the dip. Well, I'm not waiting for the old time high. And then you had the dip again, and then the boys unloaded at 130. And we talked about that level. So see where the money starts to flow back in. Right now, you're already through yesterday's low. I mean, if this is just 107.29 fills the gap. So that's a small area. Now you got negative news out there. Usually these antitrust things are pretty short. No, I don't want to say.
Let's move away from Nvidia. We've already covered it. You went back to that one. Let's go to Microsoft here because what I see on Microsoft is a head and shoulders. What I see, and again, I'm not a big pattern trader. You're the technician here. I'm more a news guy. But 400. I'm saying left shoulder the entire really beginning of 2024, 400 to 420. Then we had the breakout in May when everything ran. We get the head back up at 468. Looking at the top right chart. Now you're putting in work on the right shoulder here. That's not the most bullish looking chart I've ever seen. And then you look at the bottom right chart and you see that this stock in 2018 was $70, is now 409. So it's a 500% in basically 7 years. And again, then you go into valuation and you start looking at that and you say, wow, this stock is really super duper expensive. Some people in the chat are saying it's a value stock. It is absolutely not a value stock. Microsoft forward PE, current P is 34. They got the forward PE at 30.8. So 31, call it. But I mean, this is, on peak earnings too. So Microsoft, I wish we had charts of the history of PE. I know there's some software.
Yeah, we talked about that before.
Chat, if you have that, it'd be good to see. But I know I sold my Microsoft. I had in the long-term portfolio for a very long time. It was Josh Rasnick that got me into it at $150. He came on the show and said, I love Microsoft. And I was like, I like Microsoft too. I bought it at $150 and sold it at $350. It was fantastic. I've sold it because the valuation had become 27 times earnings. And I was like, that's pretty expensive for Microsoft. Well, now it's 34 times earnings. So it's just continued. And that's actually after coming off, it was 38 times earnings at the peak. So it does, like, again, valuation matters when the story cools off. And the story is cooling off for the AI a little bit here. I don't like the technical setup on Microsoft.
It's almost a head and shoulders.
I think it looks concerning.
It's almost a head and shoulders on top of a head and shoulders here. If you want to
It got a lot of dandruff, you're telling me.
Yeah, look at that. I mean, you get the main one you talked about now, but now it's kind of like the right shoulder, the shoulders just kind of leading here. But yeah, you're right. I mean, you see that pattern. Yesterday's low. Are we through yesterday's low in this stock? I mean, really, that's the only thing you can. Well, yeah, we're below yesterday's low. So if you're looking at these stocks, and you're trying to buy the dip, I don't know. At least late for a double bottom or something. Looks like there's the only two lows in the same area. Microsoft here is under 400. The rest of the lows are just kind of spotty. But we talked about this before. Besides Apple, which is still just hanging up here. I mean, if you're worried about the market, I mean, this thing's not too far off all-time high. With the Googster, that's almost back at its August low. That's a bad open.
Google's got some problems, though.
Yeah.
I would stay away from Google because I do think, and this is the reason I sold my Google, which was early again. I sold a lot of my long-term stocks way too soon. I thought the run-ups were, done, and they weren't done. But my concern with Google is ChatGPT and the chatbots. And, and I've even tweeted out recently, are you using chatbots or using Google? I mean, all of this is competition for Google's monopoly on search. And if people are going to start using chatbots more than search, that is a major, major problem for Google. Yes, Google's going to have its own chatbots as well, but it's a major problem, folks. And I think that's why Google trades with a valuation a lot cheaper. And again, Google's still not going anywhere. It's still a great company here. But if you look at the forward multiple on Google, it's 18. Why is Google trading with almost, 60% of the multiple of a Microsoft? People ask that question. It's because competition is coming for their main product. That's an issue.
But there is one stock I just want to mention. It's in the green today. How about your Berkshire Hathaway, Dennis? People talk about just own one stock there. Look at that thing.
It was up yesterday.
Yeah.
I'm long Berkshire Hathaway in the trading account right now. Full disclosure, I sell them after 9:30, but I've been buying it at the close or after hours and selling it at the open because it feels like it opens up every day. And I mean, on a day like yesterday, when everything was down, like across the board, like so many stocks down. Even core holdings in Berkshire Hathaway were down. Berk was up $2.50. That's unbelievable. I have no idea why. Again, financial's been strong, industrial's been strong, but financials were weak yesterday. Industrials were weak yesterday. Berk up again. So, I mean, it's just defense. They're playing defense. The market's scared. They're like, we're going with Warren. So, I can guarantee you, I can't guarantee anything, but I didn't add it all up. But pretty confident the NAV in Berkshire went down yesterday, but the stock still went up. So I don't know. So I'm long it again. I'll sell it at the open. I've been doing it. I've been doing this trade for a while here now. I've even tweeted about it and talked about it. Buying at the close and selling at the open because the bloody thing opens up every day. Just, it's a pattern. I've recognized pattern. I'm a pattern trader. So we'll see if it's going to do it again. I don't know if it's going to do it again here today, but it's trading up again. Here we're in another day where stocks are getting killed across the board. All kinds of stocks down another 1%. Berk is trading green. Warren, man, the GOAT. You want to talk about GOATs? It's not Pelosi, folks. It's Warren Buffett.
All right, let's get into some earnings because as much as yesterday's price action in Nvidia was a red flag, there are some other red flags in the market today. We'll start with Zscaler. That's what Joel pulled up first. Zscaler, down now is more than 17% after this report that came yesterday after the bell. I saw some people on Twitter that were getting bullish. Zscaler said, they're going to take market share away from CrowdStrike after the big thing. Well, Not a great report. EPS came in at 88 cents, which beat the 69-cent estimate. Sales came in at 592.9 million, which beat the $567.9 million estimate. But then some soft guidance. The outlook missed expectations. And this is just not a market that you can come in with soft guidance or anything below expectations, or you will get hammered. And that's exactly what happened.
You cannot report, period, in this last, 12 hours here after a day like that.
Yeah, we're going to get to
reporting, they're looking for pops to sell. If the stock rips up, even goes up a little bit, they're looking to sell it. This is just the market that we're in. So fantastic points. This is a crushing. Stock is getting absolutely hammered. It just lost its entire August gain in one foul swoop. So it takes, the awesome August that it was, August 5th, the stock bombed at $155, runs to 200. So you're talking about stock going up, 30% basically in August and on the back half of August, and then giving it all back basically in one day. All back, gone. It's gone, and it's gone. Wow. And no buyers at all after. I was looking at that chart on the left. Just nonstop sellers. Every time it pops like 50 cents a dollar, more sellers, more sellers, more sellers. But again, it's just the market environment that we're suddenly in here. It's September. It's changed. Forward P on this puppy is 57. It's not cheap. They're not looking for these kind of stocks.
I talked about this one yesterday, and I was just like, wow, there's someone making a stand at 200. And look at that. Look at the last 5 or 6 days, even more than that. But that's an irrelevant number right now when you're trading down over $33. I mean, hello to the August low. I mean, that's the only number you got here. 155.97. That was buffered by a late May low at 155. So, I mean, you've come this far, this fast. Why not try and wait for that number? 155. Holy mackerel.
I think it's going to test. It's 159. They've come this far. So you have the double bottom. It would appear to be a good level, but, I don't know if things are holding the double bottoms. It's come a long ways. If you're shorting it here now or it's panicking out, selling it now, you may as well wait for the 155 or raise yourself $4 more and see. But we talked yesterday on Boeing, we were saying, well, it's like 167. Man. It's like it's probably going to test down there, that 160. Well, it did. It took it out. I mean, this is the kind of market that's taking out support levels.
Let's move into another report, which the reaction might even be a little bit more worrisome to me. That's Dick's Sporting Goods, ticker DKS.
Definitely.
Because Dick's this morning reported, like Zscaler, higher EPS than expected, $4.37, which beat by 51 cents. Revenue of $3.47 billion, which beat by 40 million. So Dick's beat on both on those top line numbers. And then they actually raised the outlook on strong demand, declared a $1.10 dividend. So you beat on revenue and EPS. You announce a $1.10 dividend, and the stock is still down, trading down now $3, 1.3%. So to your point, Dennis, like, I don't know what you have to say if you reported in the last 12 hours for the stock to trade up, because it seems like just anything they're looking for an excuse to sell. Dick's taking a hit. Albeit only 1.3% in pre-market trading. But still, after that report, you could have given me that tape. You could have given me the report before it came out, and I still would have lost money trading.
You would have lost money, yeah, because it's a beat, raise, and said everything right so far. Obviously, we're not listening to the conference call, but, media will come out and find a reason. They'll find a fundamental reason. The reason this is selling off is because the bears are in complete control right now. And stock has run up. The bar was high. And obviously, it's just the tape. You're reporting into the worst possible tape. So it's a fantastic example of what we were just talking about is the stock did everything right. It doesn't even matter. Trades down.
Look at that consolidation ahead of the report, too. Wow, how many times did we see this in stocks? This was consolidating at all-time highs, just patient sellers. And I don't know who was buying it ahead of the report. Down 269, pre-market high. Forget about that. That was 238.5. Bottom of yesterday's range. If you're trying to scoop this up or you want to see a sustained rally, that's it. That's only a little less than $1 away. 230.23. one potential area. But if they get this, they decide, yeah, we do like the port. The S&Ps catch a bid. You could see unchanged here at 232.12. That was the mark from yesterday. As far as trying to pick a bottom off this, we are off the pre-market low of 224.01. So you did catch a bid here. But look at the upper right chart. Like, where do you want to step out in this thing after it traded down to 186.55 in August and just was a rocket ship here? So, once again, resistance. I've said this a lot over the last couple of days. Resistance has been easier to identify than support in a lot of stocks, and that's the same thing here for DKS, Dick's Sporting Goods in the red. I like that place. They're big, but I like them.
And now let's go to the disaster of the day here. The stock with the lowest bar possible found a way to get under this bar. Dollar Tree. The dollar stores are just an epic place to just go and die. Wow. Give us the earnings. This was just like DLTR. I said it. The bar is really low here. These earnings were just a copy of Dollar General. So it already got hammered 20 points, basically 15 points off of Dollar General. It's a repeat of Dollar General. This is the worst report you can possibly get. Go ahead, AB.
Yeah, so EPS came in at 97 cents, missed by 7 cents. Revenue of 7.38 billion.
Unadjusted, it was 67 cents.
Yes.
Against the $1.04.
Yeah, well, I'm seeing both. Yeah, 67 and 97. So either way, missed there on EPS. Revenue of 7.38 billion, missed by 100 million. Cuts the 2024 outlook. So you have the weak guidance, and like you mentioned, Dennis, this thing was already trading down on Dollar General's report. So the bar had been lowered. They still come in below that bar. The stock trading down another 10% now. So after closing down more than 3% yesterday, so Dollar Tree, you go back to March of this year. So that's what, only 6 months ago, it was $150 stock. Now it's an $81 stock. So nearly cut in half in about half a year. So Dollar Tree not hanging in there, not doing very well right now.
Extraordinarily difficult to call bottoms when fundamentals are failing, and that is what is really happening in both of these stories. This is a complete revaluation because margins are probably getting squeezed on both sides, meaning the cost of their goods are coming up, their labor costs are coming up, and expenses are up. I mean, it's just a tough business to be in a dollar store when you have inflation just killing them. And we can say inflation, is beaten. The Fed's going to tell you it's beaten. But they're sitting here. The prices didn't go back down. So they're sitting here trying to sell stuff for $1, $1.25, or $1.50. And the stuff is just more expensive. So the margins have got to be getting squeezed here. It's just a repricing for higher prices for longer and forever. I mean, beat inflation all you want. The prices are never going back down to where they were in 2020.
No.
Where they were in 2019. We're not getting back down there. So, and then people all want to make more money. So I don't know. Do you change to $2 stores, $4 stores? I'm 5 below, going to go to 10 below. Obviously, 5 below, had an okay report, but then they turn around and whack that anyways. So these are tough businesses to invest in right now. Tough businesses.
Everyone's going to Walmart. I mean, that's it. I mean,
and there's a great point there too. Walmart and Costco continue to go up because they've got they have pricing power a lot more than a dollar store would. But two is just it's like groceries, everything. They're just seen as like the place to go to get your stuff at a reasonable price still. And like I said, I got my Costco membership back, and I was like going in there, buy Listerine. I'm like, it's like 30% of the cost of the regular store. So you do save money buying in bulk there. So maybe everybody's just going to be Walmart and Costco now.
Boy.
I intentionally left Target off.
Yeah, Target. Yep. At this $70 area, if you want 2-star support, you got down to 69.55 in the aftermath of the earnings. And then if you're looking at the bottom right chart here, let's make it a little bit bigger. On the monthlies, that's where you go to, folks. You're back down here. You're back down to your COVID levels. Your COVID low. Well, we'll leave that out. That March low was at $60, but two lows in the same area. Let's just round it off at 70. as that coincides with the pre-market low of 69.55. And if you're rushing out to buy this, look at Dollar General here, and that is yet to sustain a bid yet, or not like the General Dynamics, DG. There you go. Three lows in the same area. That's what you got going there in DG.
People in the chat talking about AMD. It is trading up because of the Nvidia news. So Nvidia antitrust, naturally good for AMD. So that's why it's up. People say, well, why isn't Intel up then? Because it's Intel, and Intel only goes down.
Did they hire somebody? Did AMD snag somebody from? I thought I saw something.
They had another headline.
Well, this was
traded right up on the antitrust stuff last night. As soon as that antitrust headline, came out, AMD started trading up.
Well, that coincided with AMD appoints AI industry veteran Keith Stryer to expand global AI capabilities and engagements. But that's roughly the same time that
so
the
two
NVIDIA
things.
news.
One, they take an NVIDIA employee, and then two, they get the DOJ saying, "Well, it's NVIDIA thing. It's got to be good for AMD as well." So two things.
There you go. AMD getting a pop when it seems like everything else is getting wrecked.
NVIDIA's loss is AMD's gain.
100%. All right,
still long AMD in the long-term portfolio, half size.
I see our guest hanging out backstage. Jim Tassoni patiently waiting. Let's bring him in a couple minutes early. See what Jim's been watching.
All right, Jim Tassoni. He's from the CEO of Armor Wealth Strategies. Jim, great day to come on here for us. I mean, just such an easy day in the market to figure things out, put a few charts. I'm going to let you steer here. You put together a presentation. We're going to rip through it and then come back with some really tough questions.
Sounds good. Yeah, I think you guys had me on August 6th or 7th too. So there seems to be kind of a theme here where every time the markets are super easy, there's no volatility, it's calm waters, you guys say, let's bring Jim on. It'll be fun, and he can try to navigate us through this. So I appreciate that. But yeah, it's been definitely an interesting couple of days. And before I get to my charts, I'll kind of talk through. I mean, I listened to your guys' show. I heard you on with Scott Redler yesterday and talking about, managing different accounts. And I think before I go through my slides, it's always so critical to understand that, all of us have various trading accounts and kind of trade a little bit differently. So when I talk about trades here, it's usually in my swing trading account. I have a day trading account too, and then I have my longer term investing account. And in that longer term investing account, and Dennis, you kind of mentioned it this morning, these are great opportunities to find stocks that you like, ideas that you like, fundamental stories that you like, and then try to identify areas that you'd like to either initiate a position or add to them. Now, when you're swing trading, you want to have an area, this is where I'm going to get in, but you want to have that out. And then day trading is a whole different story, and we'll leave that for another day. I'll use the baseball analogy. For the month of July and August, and Scott brought this up, first half of August, I was seeing the ball clearly. Every pitch looked like a grapefruit coming right down the middle, and I was smacking home runs every day. Last 2 weeks, I feel like it doesn't matter what I do. I can hit a line drive, shortstop's going to the side, and he's diving and making a diving catch. I cannot, for the life of me, on my day trading account, find the right feel for this market. So I've kind of eased off the pedal there a little bit. But let me go ahead and share my screen here. And I will, first of all, apologize that I have been working hard on my presentation skills here. I've been working to make this look a little bit better, but my microphone is still busted. I've ordered a new one. With that being said, it was supposed to be shipped next day from Amazon. And of course, you get the notification that shipping's been delayed. That, I don't know how many people that happens to, but Short Amazon, I don't know. That's not in my trade deck today, but I'll let you guys be the...
I usually have good experiences with Amazon, but if you're ordering from like a non-Amazon, like one of those extra sellers or whatever, sometimes that does happen. So let's get, your mic sounds great. Jim, your mic sounds great. So let's dive right into this.
Here we go. So first thing I wanted to bring up is, there's a lot of talk right now about people saying, oh, the Fed's done their job. They've conquered the inflation beast. Inflation's dead. And we're going to have rate cuts from now until the future. We're going back down. Everything's going to be hunky-dory on that front. And I just wanted to point out, and I actually stole this slide from Bob Elliott, so I want to give Bob his kudos here. He's a great follow on Twitter for longer-term macro-type information. But this was something that I found really interesting, and you can kind of see the core PCE every month, but then also the month-over-month differential. And one of the things that I like to point out was the July month-over-month. And obviously the absolute numbers continue to tick down, but we see the July month-over-month inflation data actually ticking up by 0.5%. And so while 1 month doesn't make a pattern, I think this is something that we should really pay attention to going forward, because if we see an uptick in inflation and maybe there starts to be thoughts that inflation isn't tamed, we may have another beast to conquer in this market. So the next thing I look at, and this is a very interesting slide. This takes us back. You can see, looking all the way back to 1950, monthly and daily returns in the market. And again, a shout out to Ryan Dietrich from Carson. I know you guys have him on your show. Yeah. This is the chart that he put out. And I found this really interesting as we head into September. So what could we potentially expect from September? What are our average returns look like? And we all know that historically September is the worst month for stocks in the market. But historically, we actually don't have as bad a first half of September as we do second half. So how does that set up for me, just paying attention to historical probabilities and watching for setups? If we bounce now, we had a really bad first day, seems to be some follow through coming up right now. But if we bounce in this market, if we see another move higher, the back half of the month does not set up well. So you may want to look for areas to lighten up if you're a long only trader, or potentially initiate shorts if you're a trader that does go both ways. And so now I'll kind of go into my individual charts. And I think you guys have talked about, Joel, I've heard you say range trading. And we are definitely in a range right now. And I think the last time I was on, I mentioned sort of this 559, 559.30 area as an area we needed to hold. We obviously didn't hold that. We whooshed through it yesterday. And now we're back in the middle of this range. And I would say we're kind of in this 536 to 559 range. Top of that, you want to be lightening up, maybe looking to initiate shorts with some defined risk. You can see a lot of highs in that sort of 562-ish, 563 range. You could initiate shorts there. I would look to buy down in that 536 and sort of play this range for a longer term swing type trader. I think this is the range you can pay attention to on the S&P.
So you're not looking at all, like at this point in time on these charts here, Jim, it doesn't sound like at all you're looking to buy the dip today, because this buy range for you is a hell of a lot lower than we're currently at.
Yeah, for the overall market, for the SPYs, I'll show you we're a lot closer to it on the Qs, my quote unquote buy range. But for SPY right now, no, I'm dead neutral on the overall, as far as buying the overall SPY market. Now, individual stocks, there's always opportunities, and you know that, Dennis. But for the overall market, I am dead set neutral right now, and I'm just kind of sitting on my hands, waiting for the SPY to show me something before I really want to initiate a position there. Now, as far as the Qs go, this is my range here, kind of this 455 to 488 range. And we are dipping down. I think last time I looked, we're at somewhere in the 458 range. So we're not too far away on the cues from an area where I might want to initiate a position. You can see if you look at the chart here, if you did initiate a position in that 455 range, I would give it maybe to 445. We got some congestion down there. If we can't hold that, I would probably exit on a swing trade. But I think you could take a shot down at that 455 level, understanding where kind of your risk reward payoff is. And then a place that I would actually initiate a position, again, like I said, looking to sell and or short strength. And I know I'm going against Tom Lee and his call for, I don't know what it is, 500% into the
40 upside in the IWM, but you still don't like the IWM.
No. And I wouldn't initiate a position here. I think if we do see, like I said in my earlier comments, if we saw some kind of rally off of these lows into the back half of the month, I would be looking to set up a short in the IWM. I think we still have more downside to go. If we got a rally into that, I would be looking to set up shorts in the IWM. Still not a fan. I think, again, you have to be careful. You can find individual small cap names that make sense, but this broad IWM basket, I'm still not a fan. So now let's take a quick look at a couple of individual holdings that I do like. And so the idea here is, again, trying to find stocks that I think will benefit in a market that maybe is a little bit tougher. And one that I actually like here is Wells Fargo, a financial and a company that's been hated for, maybe a decade, but at least a handful of years. One of the things I like about it is I think a lot of that regulatory pressure is behind them. I think they've got easier comps than a lot of their peers. And I think the overall financial sector could benefit. I know their net interest margins might be squeezed by a few rate cuts, but I think there's a lot of businesses, real estate investors, people looking for loans out there. I think banks are going to be flooded with inquiries when we see rates go down. And I think their overall volume will offset maybe some pressure on the net interest margins. So I like the idea of buying Wells Fargo here down in that 57.80, 57.75 area. With that, you can see the stop and the target, a good risk reward on that stock.
I mean, this sector has been the source of strength. You know, like we just look at all the individual banks from JP Morgan to Goldman Sachs to Morgan Stanley to Wells Fargo to Citigroup. Citigroup maybe not so much, it always seems to be the laggard, but you know, a lot of these stocks have really been a source of strength here in the last month. And really, you know, even in yesterday's sell-off, they didn't want to sell off. The financials reluctantly started to go down towards the end of the day, but they were holding up really well here. So if you're looking for relative strength, Jim, the financials have been very strong.
And Dennis, you hit it right on the head there. And Wells Fargo finished, I think, down 17 basis points yesterday in a bloodbath. So like you said, you've got the relative strength there too. And that's another thing that I like about this sector and about this stock in particular. So whether you're playing the sector or the stock, I like them both. And I did another stock or area that I like is the insurance stocks here too. I bought Progressive at 225. I don't necessarily know that I would buy it up here at this point, but that's another one to keep an eye on.
Monster too.
Yeah, that's another one that I think we can definitely keep an eye on. Insurance stocks, I think, are another place you could hide out if this market gets difficult over the next couple of months. Another stock that I like, really more the setup here. I like the energy sector overall for a longer term trade, but short term, I think there's an opportunity in ConocoPhillips here. I like this stock. I like buying it at 109.50. You can have this is I guess I would call a shorter term swing trade. You can have a pretty tight stop on this with a good upside risk reward here. Love this stock. Love their position in the Permian Basin. They have a higher margin with lower risk to extract oil in the U.S. If we get, and again, I'm not going to play politics. I think we're a 50-50 shot either way here. But if somehow, you get a Trump presidency, a Trump administration in there, I think it's going to be very beneficial for those companies that have U.S. properties from an energy standpoint and a drilling standpoint. And so I think you could position yourself in Conoco both short term and potentially medium term, if that plays out. And then lastly, to go into the season we're in right now, I do have a short, and my short is Warner Brothers Discovery. Now, my short setup requires the stock to rally a little bit here. And so if we saw a rally, I would definitely short. But this is a company that I think has a lot of difficulty ahead of it for two reasons. One, they have no sports properties, especially they don't have a football contract. You cannot compete as a traditional content provider without that live entertainment and without the sports and without the NFL. And all the other networks now have NFL contracts. This one doesn't. Their content's suffering. They're getting their lunch eaten. I do not like this company from a competitive standpoint and just from an overall industry standpoint. So I'd be looking at a short if you get a bounce in Warner Brothers.
It's the whole reason you don't cut the cord is for the sports. I've said it for a long time. There's two things I haven't cut the cord for, because I don't like streaming sports, because when you stream sports, it's 30 seconds behind because the way it buffers and does everything. I don't like my buddy texting me, "Oh, nice goal." And then I come through and I'm like, "What goal? Oh my gosh." And now I see the goal because you're 30 seconds ahead of me. I absolutely hate that. I actually went with my cable company and I cut the cord briefly and we got away from the digital cable. And I was like, one, CNBC's way delayed. So I'm watching that, which sucks too. But two was like sports was brutal, So that's where I'm like, bring me the digital cable back. So if you're trying to be a cable, network and you don't have sports, what's the point? So I'm with you there. WBD has been a tire fire for the last 3-4 years. Maybe the fire just continues.
Amen.
All right. Well, Jim Tassoni, again, from Armor Wealth Strategies, always a pleasure to have you on and see what you've been watching. We got some great picks. We got even a short today from Jim. So
nice.
Lots of actionable trade ideas there. Jim, any final words to leave our audience with?
My only final words are you guys talked about retirement strategies. And Aaron, you mentioned meeting that guy on the pickleball court and what you would tell him in retirement. And I got the inside scoop, actually, to what Joel is telling everyone in their retirement right now. And you know what it is?
Buy Bitcoin.
No, it's bet Michigan's getting 7.5 at the big house against
No. That's fake news. That's fake news. I'm telling you, that's absolute fake news. Those Texas wide receivers scare me. I'm telling you. I would lay the 7, even though my dad's golden rule was never give more than 7. Man, oh man, I'm worried. I can honestly say I watched those players, but we'll see how it plays out with the field. Jim, thanks a lot. Great insight, great charts, great homework. Sure. Thanks for joining us here on PreMarket Prep.
Thanks, guys. Take care.
Thank you, Jim. All right, wait, couple things there. First of all, because Jim, great callback by Jim, mentioning what I was talking about yesterday, meeting the guy at the pickleball court. Because I told him, I was like, because he was talking about Nvidia, I was like, well, I don't know. I mean, the short term, it could go down, 10%, but I like it long term. I didn't know it'd go down 10% in one day. So I said, in the short term, I don't know. But what Jim was talking about with Warner Brothers and the cord cutting, it reminded me over the weekend, Saturday night, I was at a restaurant, or no, Sunday night, I was at a restaurant in downtown Detroit. and they have all these TVs. It's, it's a bar restaurant, and we were trying to watch the USC LSU game, and we asked them to put it on, and they don't even have cable. They're trying to go on their apps. They go to like the ESPN app, the ABC app. They can't get it working. And I'm like, if there's one place that should not be allowed to cut the cord,
Yes.
a restaurant bar should be required to have cable, because there's no reason why and they couldn't get it on. We couldn't watch the USC LSU game. One of my friends at the table pulled it up on their phone. So we were streaming it. Not only we were watching on a phone, but like you said, Dennis, we were delayed on a phone because they didn't have it. And then to Jim's point, I mean, everything live right now, that's what advertisers want to pay for, because most people just watch, their shows or movies or whatever on Netflix. There's no, I mean, I know Netflix does have the ad-based subscription now, but for the most part, people aren't watching stuff live anymore. Back in the day when Friends or Seinfeld was going on, people used to watch those shows live when they came out. So the commercials were worth a lot. Those advertising slots were worth a lot. Now the only thing people watch live are sporting events. So that's why, like, advertisers, Coca-Cola is going to pay 10 times more for an ad during a live football game than they would during a rerun of Big Bang Theory. So I like Jim's call there, that not having football, not having good live sports is a death sentence for a lot of these companies.
I think so too.
And that's why you're seeing, now Netflix, Amazon Prime pay billions of dollars for these NFL deals, is because they know that they want those prime advertising slots.
Wish you could short NFL teams' valuations, but that's a whole nother thing.
Well, now they got private equity coming. Coming
oh boy.
Talk about merchants.
Sell it.
Too, but wow.
Woo.
Okay, so we got a rally. A little bit.
We got a rally. We do.
A little bit of a rally. We're seeing pockets of strength. Berkshire pockets of strength always, but AMD
up $1.17.
I know it's and again I have the long, but I'm probably selling it at the open. General Dynamics, just cherry picking what's green here today. Oil a little bit green. AMD standing out. That's obviously off the Nvidia higher. Plus, the antitrust helps it as well. Some consumer staples, but they're kind of mixed because we had a consumer staple report, which was Hormel Foods, and it's not doing that great. It's actually down 6.91%. If somebody wants the details, then go look it up. It's definitely tech. Like, the sell-off is mostly tech here still, but tech's coming off the lows. Like, Nvidia itself too is only down $1.50 here now. It was down as much as $3 here overnight, so it's coming off the lows. So you do have a little bit of the buy the dip mentality coming in here, which I think after a big sell-off like that is to be expected to a certain extent. I'm still torn, and I'm not buying Microsoft, and it's not stock that I'm looking for, but there's definitely some stocks in the tech sector that have come off substantially. And I mean, Micron has come off all the way. Micron is back down to its August 5th lows. There are some stocks that have come down a hell of a long ways. And, we can say, and there was an analyst from Baird there this morning tweeting out, well, we went up 18%. You guys are complaining about a 2% sell-off. This doesn't feel like we're only down 2% from where we were a week and a half ago. It's that way on a lot of stocks that are like financials and some of them. Tech is not that. Tech is down significantly from where it was.
Yep.
We're not talking about a 2% sell-off in Nvidia. We're not talking about a 2% sell-off in the Qs. The Qs were 485, we're 459. We're talking about 7% sell-off in the Qs. And that's where a lot of people are invested. So we can put, the SPY blinders on, and that is the SPY blinders, and just say, oh yeah, we're only 2% off the highs. What are you guys complaining about? There is a lot of other stocks to complain about here. This has been it was an absolutely wicked sell-off yesterday. The question is, in the aftermath, is anybody doing some buying? Is anybody coming in here and saying, maybe like nibbling into something? Chat, perk up here if you got stocks. AB, what are you thinking?
I've got a stock I nibbled at a little bit last week that's on a dip now that I might nibble at again. I don't even know, at least since I've been on the show, if we've ever talked about this stock on the show. But it's right at all-time highs. A very interesting technical level, actually, because we kind of got up to this point in 2021, got beaten down. Now we're right back up to those highs. That is Mercado Libre, ticker MELI. And before I give my take on it, Joel, I want to hear yours because I'm very curious about this from the technical standpoint. Because
man, oh man, long consolidate. You had the move up to all-time highs. You got the consolidation. kind of held up yesterday. I mean, you just got a 1978, 1980. You're still a long ways of, from that area. That's your trap door. If it takes that out, then, boom, say hello to 1900. Don't like that bar from yesterday, but longer term, oh wow, that old time closing high is way up there at 2061. But man, I want to be buying here, and if it takes out this 1980 level, then Katie bar the door on the downside. You're ways away from it now. Wow, it's actually pretty close to it. So that's my look on it.
It's been an
Got to hold
unbelievable
19.
stock, though. That's been an
Yeah, it
unbelievable
has.
stock. It's a company that I've never, I've traded at the odd time. It's hard to trade $2,000 stocks. They're just a little bit thinner, and I'm still, I know you can say percentage-wise it's okay, but it's still they're thinner to trade. Just looking at valuation metrics here, 44 times forward earnings, 72 times current earnings. The stock is definitely not cheap, but I know it's a good story here, and the story remains hot. And you can't argue with the chart; it's near all-time highs.
Well, and so I was going to bring up the valuation, and it does look a little expensive when you're just looking about the forward PE. But when you look at the revenue growth over the past, really like 6 quarters in a row, the revenue's been steadily growing. And a lot of times when you have growth in a stock like that, you'll actually see the forward PE be even higher. I'm seeing a forward PE of 44 right now in Benzinga Pro, price to sales of 5.9. So again, not cheap. But if you look at this bucket of stocks that have actually been growing revenue quarter over quarter in the past six quarters, most of them are actually trading at a higher multiple than that. So like when it's not cheap whatsoever, but when you compare it to stocks that do have that type of growth, it actually does come out on the cheaper end of it. And I just think the story, like there's such a huge opportunity. For those who aren't familiar with Mercado Libre, it's basically an e-commerce play for Latin America. And it's in so many different countries that have a very high populations. And if you look around the world, there's a lot of countries that have been slower to adopt e-commerce than the United States. So right now, like, I don't even know the percentages off the top of my head, but like everyone orders stuff in the US off Amazon, off, different types of websites. And that trend is starting to now, you're starting to see that in other countries. So I like Mercado Libre for the long term. I'm not buying it as like a swing trade. But you asked what I was nibbling at. That's one that I've been watching.
Joel, you nibbling on anything long term?
No, not really. Looking to sell, if anything.
Looking to sell, looking for rips to sell. And
Yeah,
I'm
no,
torn too. Like I'm
I don't.
looking. I'm going through charts and I'm going through valuations, and I'm like, I don't like anything that's like, I'm into the tech, I'm into the story, and I'm like, well, I could go buy, some banks, and they're fairly cheap, or you could go and buy like Toyota. Somebody was saying to me, and I'm like, yeah, it's cheap, it's cheap, from a PE perspective. It's come off a lot, and maybe there's a good story there, but I'm like, I'm just like torn. I'm like, there's just nothing jumping out to me like, wow, that's a deal. I don't see it yet. I don't see that stocks, and again, that's why I want to hear from the chat too. And I'm asking people, what are you buying? It's mostly the same stocks. People are saying Nvidia, some people are saying Tesla, some people are saying different stocks, but it's not like, wow, this is a steal. I just don't feel like we're getting steals on anything.
Yeah, hard to find steals. It's interesting because the market's done so well that the most stocks, the valuations, the multiples are still high relative to historical norms. But then we've got this sell off, and like just because we've had this sell off doesn't mean that the valuations have come down to a level where you're like, if you're a value investor, you're not coming in and saying, oh my God, look at Microsoft here, look at Nvidia here. They would need to fall a lot more before you get to that point. We did talk about, a stock like Lululemon reaching the point where finally value investors come in and start to see value in the stock. We saw that with Meta a couple years ago when Meta went down to like $100, and it was like, all right, at some point this stock is a value play, and then it came all the way back. So are there any other stocks outside of Lulu that have now come down to a level where value investors are willing to come in and buy the dip on?
You know what had a nice reaction to their report, and we talked about it, was Alta. It had you had the Warren premium in
Yeah.
it, and then they took it out. Was looking for a gap fill in that one, didn't quite get it, but Warren might have been back in there buying the dip on that one. I would say, if anything, like AI, if there's is there what's the best? Is there a good liquid ETF for AI? Dennis, is there any that you trade for hedges or anything?
Just
Or
AI? That's a good question for the chat. I don't know, like,
yeah,
that there's a pure AI. There's lots of tech ETFs that are full of AI, obviously. So it's basically
yeah.
buying a tech ETF like QQQ. You're buying AI. But I mean, is there a pure play that just owns just Nvidia and just all your AI plays? Probably.
Uh,
Chat. What's the ticker on the liquid? And we want liquid ones. We don't want these ETFs that have like 10, huge spreads in them.
Someone say chat. I don't know. We'll go to the chat. Yeah, this one looks kind of thin, but all right, we're bumping up against the top of the clock here. Oh yeah, that's it. Well, traded on. Oh boy, trade by appointment only on that one. All right, up against the clock here. Coming up, a little bit of a rally over mid range on the day, well off the pre-market low. I think you just got to be patient to see if we could test the close. We never saw the close yesterday because of the overnight action, but kind of thought we were going to go up and test the close yesterday, but that was the wrong thought. So that'd be the first thing. Look at your stocks that are in the red. Look at the bottom of yesterday's range, looking unchanged, and well off the pre-market low. So see if we can sustain a bit and get back to unchanged on the session. And then tomorrow, Ryan Dietrich's going to be joining us with his updates, and he was even cautious heading into the month of September. So it'll be great to talk to him tomorrow.
Yeah,
Remember, stick around here. Show continues. Do not leave. We have Z. Bring him in here. I call you Zed because I'm from Canada, but he's coming in here.
I like it. I like Zed.
Zed
I
is
like
here. Zed is not dead. Zed is here. That's my Pulp Fiction.
What's
going
on? I'm good, man. And yeah, I agree. Trading those ETFs that are low volumes is never fun because I'm always like, oh, this is cool, leverage. And I'm like, oh, cool. I lost half my money on a bid-ask spread.
On the spread.
So, I hear you. Yeah. But
there you go. All right. Well, again, like Dennis mentioned, we do have a little bonus interview today coming up here right at 9 a.m. So do not go anywhere. Make sure to stay tuned. Zunaid will let you go ahead and take over the reins.
Absolutely.
And hope everyone has a great day.
Take care, AB, Dennis, Joel. See you guys later. Chat. We've been talking so much about the trading competition. You've heard me mention it many times when I'm on this stream. You've mentioned AB. You've seen AB mention it as well. But I figured we'd go ahead and interview the CEO from TradeZero, who we've kind of partnered up with us. Dan, give me a thumbs up whenever you're ready, and I'll go ahead and bring you on the show. Dan, good morning. How are you?
Good morning. Good morning. Great to be back here. I forgot what an education I get from the pre-market prep guys, and I miss those guys. I was hoping there'd be some interaction here, but next time.
I got you next time, and I'll tell you what. Sometimes I'm sure hearing these type of ideas, you're like, you know what? Forget being a CEO. I'm just gonna go ahead. And maybe I'm just gonna trade some of these ideas.
Yesterday was brutal. Not gonna lie.
Yes, it was. Well, I've got Nvidia put, so maybe I'm okay with the DOJ doing a little something. I don't know. I know. Okay. But look, I wanted to kind of bring you on so the folks can kind of understand just from you, like, hey, what's happening with TradeZero and the cool things that you guys are doing. So let me kind of start things off and say, one of the things that TradeZero is known for, especially with you guys winning best broker for short selling at our FinTech award for 4 straight years as well. What is it about TradeZero that makes it such a great platform to sell short?
Well, I think when it comes to shorting, Zunaid, it's all about access and it's all about availability. So, to short an easy to borrow stock, you can pretty much do that anywhere. But anything that's not easy to borrow outside of your S&P names and those usually require a borrow or a locate to get into those. Yeah. So for us, we are partnered up with over 12 different liquidity providers for borrows and locates. Our now patented locate functionality and locator platform gives our traders the ability to what we call mark for credit for those locate shares that they no longer need for whatever reason, whether they use them or not, regardless. So when you no longer need a locate, and these are things that people would pay for to get access to these non-easy to borrow shares for shorting, you can market for credit on our platform. And when the order fills, when someone else wants to buy those shares, you recoup 30% of the current locate price. So it gives folks an edge because they can monetize something that they really can't anywhere else. Yeah. It gives our traders another source of supply So, you know, by nature of the wheel, traders know that, hey, okay, in the very unique situation that trade zero may be out of supply on something, they know that if we had it earlier in the day, there's always the opportunity for them to source those shares at some point during the day by nature of someone else marking those shares for credit. So it's really one of our key differentiators, Junaid. Very proud of the product and the platform. And like I said, we just received a full patent on it in July this summer.
Nice. Yeah, I think especially if you're able to, because everyone knows like, oh, hey, locate fees are so high. Well, now you get to be on the other side of that if you want to get
Correct.
a little cut of it as well, right? It's kind of like when I go back to options, people are like, oh, the best way to work with options is to sell it. Well, maybe this is something you want to include in your strategy as well. All right, let me go ahead and talk about the trading competition as well, right? And obviously you see the banner that's on top. I want to also go ahead and maybe share my screen here in the terms of a couple of other things we have going on, but tell me about this trading competition. Why'd you want to go ahead and partner up with Benzinga as we are hosting this trading competition? $30,000 on the line is a lot of money. What are you kind of most excited for here?
Well, look, obviously there are a lot of brokers in the space, a lot of folks that you know, could have been tapped and you guys could have partnered up with. So, you know, we're excited, really excited to be doing this with you guys. We love Benzinga. You know, we've done a lot with you guys, really. I think kind of since you started, Jason and I became early friends back in the day with us using you guys for news, economic calendars, and the like. And incidentally, we've just integrated the live squawk feature into all of our platforms. So when contestants enter the trading competition and they access one of our platforms, they will be able to leverage the Benzinga real-time squawk feature, which is a nice value add. But the thing that I'm most excited for is getting folks exposure to the platforms that I'm really proud of. You know, in the direct trading space, I would say there are a few firms that have their own technology. A lot of it is licensed and white labeled and stuff. These are very complicated systems. There are a lot of moving parts. It takes a lot of people to run them. So I'm really excited to get people exposure in a very free, unfettered way to really interact with the platforms, to trade the markets in a real-time fashion, and really, you know, really get the experience of what it is to be a Trade Zero customer by nature of leveraging our platforms.
I did not even know that live squawk or that, you know, our squawk was available. So I'm just saying that's a nice little way to get the experience on that side and no additional cost to you at all. All right. Last thing before I let you go, I know someone in the chat asked, hey, can we go and see the leaderboard without signing up? One, I think you 100% should sign up because here's what the platform itself I just got signed out because I was on it earlier today, but here's what it'll look like, right? So you kind of have this sick platform where you start off with $100,000. You can see the leaderboard to your right, the positions that you have, the portfolios and the trades that you've made and all that good stuff as well. So I really love I love the Seahawk colors. So I love the navy blue and green color scheme aspect of it. So here's where you guys can check out the leaderboard once we go live here in 10 days. Now, something else, the last question before I let you go. You know, so you can win up to $30,000. You can, you know, also win a lifetime access of Benzinga Pro as well, because there's 3 competitions, each one a month long. But you also get a tour of the New York Stock Exchange, which I think is really cool. I pretended to be a Patagonia finance bro because I actually placed a trade while I was at the New York Stock Exchange just so I could feel cool. So that was a proud moment for me. But we also provide lunch for folks at the New York Stock Exchange as well. So before I let you go, what's your favorite place to go grab lunch in that area?
So, I mean, listen, first off, I get chills every time I go to the NY and go to the floor. We have presence down there on the Amex side. So I'm there fairly often, but it never fails to impress. So I'm looking forward to meeting some people there, the winners of the competition, taking them to lunch. Obviously, there's a restaurant right in the exchange, which is great. But down there, some spots I love: the Capitol Grill, Manhattan, Connemara, and the South Street Seaport, top notch. You know, it'll be up to the contestants where they want to go. But a lot of great options right outside the doors of the NYSE.
I love it. Well, someone asked in the chat, hey, how many winners are there? So again, 3 competitions, each one a month long. You have 3 winners for the first competition. You have 3 winners for the second one. And look, for the third one, you got to go big or go home. So $15,000 to the person who comes in first place for competition number 3. So the best part is you can compete in all 3 of these. You can win first place in all 3 of these, which is why you can go ahead and win up to $30,000. Dan, before I let you go, any final thoughts?
Really pumped up. We did an internal competition, really putting everything through its paces here last week. It was a lot of fun, a lot of camaraderie that was generated by nature of the whole company interacting with the platform, and it was great. So really excited to kick off September in a meaningful way.
Awesome.
Post-summer doldrums are behind us, and excited for to kick this off on the 16th.
All right, you got it, Dan. Thank you so much for your time, man. We'll talk soon. And by the way, I know you've got some things in the pipeline. I won't tease it, but next time you come on, we'll talk about that as well.
Awesome.
Take care, Dan.
Looking forward to it.
Absolutely. Bye-bye. All right, chat, just going to quickly rapid fire answer a couple of questions. Someone asked, hey, what about Canada? Well, here's the thing. Anybody in the world can go ahead and participate in this competition. However, you have to be a resident of the United States or Canada to go ahead and get a chance to compete for the actual prize itself. So if you want to check out the platform, hey, go ahead and sign up. If you have any issues, email me, Zunaid@benzinga.com. And if you live in the US and Canada, you can go ahead and risk nothing, zip, zilch, nada, and still get a chance to win up to $30,000 as well. If you have any issues, I'm going to put my email address in the chat. You are welcome to email me. I see a couple of folks in the chat that have already emailed me about a couple of platforms and how things work as well. But appreciate your time. I will 100% be competing in this. Obviously, I'm going to exclude myself from winning. But, you know, we'll create some content. We'll bring you guys on, guys and gals on for interviews and things like that, depending on where you are on the leaderboard as well. Appreciate you guys for hanging out with us. You've got Ryan and 13 on the other side with live trading. And best of luck.